So welcome back into a trade setup review. So the last video was about the actual trades that I took during the last week of April. This review will be actually about setups that I highlighted, I didn't take, and I wanted to analyze and review with you guys and have a look at what is an ideal setup, what can we do to catch them, and what are the characteristics mainly. So as you can see already, we're starting with the break and retest of a key level. So as you can see here, this is clearly just a snapshot of the market, and it's not the real. I can go back and see other things of these charts. So basically only basing my ideas only on what I see in the charts. We can clearly see that the price action is bearish. So we are in a lower time frame bearish trend and also higher time frame bearish trend. We can see that if we came to the chart right now, what we saw was a strong rejection at this previous strong area of interest and the PPL. So we saw, first of all, this is a clear lower low. Price eventually made a new lower high and went and add the momentum and volume in clear direction to break below and make a new lower low over here. So that's our new lower low. That was the lower high. This was the previous lower low. Okay, and we saw that price made a new lower high. So we are clearly into a bearish bias. What we see, if we don't enter over there, it's fine. We have the break and retest multiple times of this level, and it's okay, it's after 10 a.m., half an hour after 10 a.m. That's usually when there's a lot of volume in the charts, and that's also much more a clear direction of the charts. So, and what we see is that price goes with a lot of momentum with one single candle to break below this last lower low and the key level. It breaks it and stays below. That's the key. The key is not just about breaking, but we have 1, 2, 3, 4 candles, basically 4 minutes, if not a little bit less, where the price shows a lot of indecision, a lot of decrease in volume, but it stays below the new lower low. So if we are in a bearish trend, if we are therefore in a bearish bias, and we enter in anticipation, each and every of this candle closure, it's a great trade to take advantage of the possible bearish move. So what we can see is that yes, price would make now another block and then another break below, will make a pullback to these previous highs after making a new lower low, and then the continuation. We don't know if then it will continue or we just end up here, because if this is another key level, it's very likely that the price from here will make a double bottom, bounce, and then possibly make a deeper correction, maybe to these previous highs actually, and then the continuation bearish. But this is basically what I'm seeing, and that's those are the characteristics. So let me write them down. So break and retest of key level. Price is let's say in trend, lower time frame and higher time frame. We don't really know about higher time frame, I would say, because that's just about the snapshot. We don't really know. Market structure clearly printing new lower low and lower high. Entry would be in anticipation at key level. And I will say also that let's see if I can paste the format over here. No. Let's see. Okay. Yeah. Anyway, from 92. Okay. Yeah, at key level. break even would not win either way. And yes, what else? Yeah, basically that's it. In trend, multiple candle confirmation. Okay, so that was the first trade. Let's grab a snap of it. And yeah, that was the first setup. Second one, I don't know if it's afterwards, if it was before that, I have no idea. I think it was afterwards, but I'm not sure. So what we saw, okay, it's price is making, what is the market telling me? Price made a higher pullback, but failed to make a new higher high. As you can see, it failed to do so. So let me put it like this. And that's a big no-no. Just to indicate that's a failure to make a new high. Instead went and broke and retested these previous lows. If the price action was not so close to the key level here, this is actually a very good entry, I would say, that I was not noticing. Breaking below and staying below these previous lows, that's exactly market structure. If you want, okay, that's exactly market structure. Like this, okay, and that would have been a possible, very likely entry. But if we are very close to the key level, yes, we had a break retest, but this break was not that convincing. But what we had was that we saw price making a new lower low, failing to make a new high, made a new lower low, and we broke below the key level. Now what we have is a nice retest. This is an actually very good entry, but we are very close to the key level. I don't really like to enter a sell over there, but it's a retest of this previous PSA on the left hand side. But when we see this strong confirmation candle, that's a very good confirmation for entry, because we are breaking below, we are in trend on a lower time frame, strong of momentum. As you can see, the number of bearish candles outsize and also outnumber the bullish ones. That only means that it's a very strong bearish trend, and unless we are proven wrong, we should take trades in anticipation of the continuation bearish. We don't want to just try to catch reversals unless this was on a high time frame. We are looking, we are here, we just made this, and now we are like a 50% retracement of a overall bearish move for a possible continuation bullish. But with this snap, we only see that in the lower time frame, that's when we scalp. This is a very good trade entry and fully in anticipation of the overall. You also have multiple candle confirmation. You could have these candles over there. Let me just mark them randomly in yellow. We have this candle closing over there. All these candles are closing with a top wick. And of course, if the later you enter, the worse it is, because yes, a 15 pip stop loss, even enter here would have been safe, but of course it's a little bit, it's worse. You will go to 30 pips anyway. In this case, also nice gap over there, and that would be the trade. So the trade is a break and a retest of key level in trend, lower time frame and high time frame. That's pretty much the same. Market structure clearly showing, printing a new lower low and the lower high, and they would have been in at strong candle confirmation. Multiple candle confirmation, win either way, yada yada yada. Anything that I'm missing? Single multiple best entries. Okay, best entry would have been at opposite candle, but this is not entry at in trend. Okay, so let me grab this one as well. No, maybe better. Okay, let me grab this one as well. Okay, so that's the second setup that we saw, and this is the third one. So as you can see now, it's sort of chronologically. This was the entry before. We saw a very strong rejection from this level, 1992.5, but what we saw is the same. So we are in a very strong bearish movement, but what we see is that price is unable to break above this previous. This was the same area of before, and failed to make new highs. So that's basically the same thing, tack, tack, and it gives us multiple candle confirmation, multiple occasions of entering sells. If we enter over there, we would probably go to break even, because this is the almost 10 a.m. so that's the hourly close, and it's sort of a pullback. This will take, if we enter over there in these candles, and we had the 15 pips break-even rule, we will probably get stopped out at break-even over there. But this is a very nice, good entry where I will highlight that I would like to enter ideally over there. So in this case, that's the ideal thing. But again, we are above the key level. That's not what we like. We want confirmation in this case, because this is not a relevant PSA. It's just a recent PSA. It's not very relevant. So this, I highlighted this entry because that's the confirmation. You have a strong candle confirmation closing below, and we have a strong candle retest over there. That's where I will probably enter the breaker retest, confirmation of price staying below, and that will go, if you enter over there, that will go smooth sailing to your TP. So now, this is again another break and retest of key level. In lower time frame now, it's quite sketchy. In trend high time frame, sketchy. Lower time frame. Market failed to make a new high above previous PSA, not relevant. Entry confirmation when strong candle closures below key level again, and that's also after 10 a.m. candle. Okay, and yes, win either way. Entry at opposite candle closure. Okay, and that's another screenshot. That's very nice. So let's move on. And we can see now, for now, we are seeing that the breaker retest of a key level are better. We want to have a strong confirmation. Now we are in a clearly trending market. Now it's a little bit of slowing down, so it's a little bit in anticipation of the continuation. And yeah, let me put like this, clear volume and direction. In anticipation of a more volume time to 10 a.m. For example, in the last trade, there was, at the time, it was not a lot of bearish price action, only these couple of candles at the new hourly open. It's not the same momentum and volume before, but yes, that's basically what is the difference in this setup, is that the volume was not there at the time of the possible entry. But yeah, we were expecting it to come due to the 10 a.m. candle that we know is a time where the volume comes in, and it also gives a very nice scalps in a very few minutes. Okay, so let's move on. So now this is a different setup, I would say, a little bit different. Now, what we are seeing is possibly a very good not matching high time frame and lower time frame bias, because probably we are in a high time frame bearish bias. We tried, and this is the same as before. Nice, very good. As you can see, if you remember what I told you about this one, that the price could have probably made a new rebouncing, a double bottom from this level, and then a continuation up at least to this level. Sheesh. Exactly, that's exactly what happened. This was the end of the bearish move, and we can also see now that how strong of a bearish trend we were in. So now this is in trend, lower time frame, counter trend, high time frame in this case, because we know that price before this price action we were in a bearish bias. So we had to identify that price reacted at 1981 key level, as you can see, broke and retested 1983.7 key level or for our PSA, actually made what I was saying, because you can see this slowdown in the bearish movement, bearish momentum. We also have a retest of this level, and we are now making a new higher high and then new higher low. We are breaking above over there. I would also love these candle entries. Like this one would be a very aggressive break and retest, but as you can see here, probably now it's very difficult to enter. It is only based on the lower time frame, because the more you approach these strong possible supply area, the less you would like to now take a buy after this double top. But nonetheless, if you look at the lower time frame, price is clearly making you and showing you a strong bullish price action. And yeah, that's a very clear cut. You have 1, 2, 3, 4 candle confirmation, multiple candle confirmation, entry, best entry would be at opposite candle close, difficult to lots of momentum in trend on the lower time frame, but very close to possible reaction on area on the high time frame. We need a way, and what else? Of course, it's a break. This is more of like is a break and retest. Break and retest, I will call it like this. I will call it end of pullback. Okay, and that's also something that is quite nice to see, like this. Okie dokie, perfecto. So let's move on. Remember that we are just looking at the charts, just looking at the price action. So this was before the first trade that we saw together, and that's this possible candle entry, this strong confirmation. So what we are seeing right now is the same as before. We are seeing price clearly making lower highs and lower lows. This was the last lower high. We made a new also a double top, lower high, lower low, fail to make a new higher high, this is a new lower low, and anticipation of new lower high. We are far away from the key level, as you can see. An entry over there, 1991, would be a nice, at least 25 pips profit in anticipation of the continuation. It will be, okay, we reject over there, I will be at break even. So that's not a risk. It's not like entering sells over there. So this is also very nice, 71, 61.8 retracement and tapping. It's not a candle close at the 61.8, but there's a very good candle confirmation for it. Best entry would have been, of course, at this candle close when the candle is closing bearish. And yeah, that's very simple. So like here, okay, let me change something. So it's an end of pullback at 61.8 percent and closing below 50%. In trend, blah blah blah, lower high, lower low, and will be in anticipation of a new lower high printed. We need a way, single candle confirmation, clear volume, best entry will be at in trend candle closure. Pretty nice. Oopsie, is that the bottom is actually very close to the other ones. Okay, and yes, so let's go on the next 96. Let's go to 97. So now this is after. Okay, that's perfect because it's after this one. So we saw the price action, we failed to make a new higher high, we are in continuation, we are actually making a new lower low, and we can probably place already here a rejection, a retracement tool, and see, okay, now this is 50%, 61%, like this PSA 61, and this will be a 75%, just for example, just saying. So, but we are still in a bearish bias, we are staying below 1997, there's a volume time, and what we can see is that, yes, 15 minutes after, 20 minutes after the candle open of the new hourly, that's actually, poof, I don't like it. I don't like that I'm taking just this, because it doesn't really matter. This is confirmation bias, that's a 75% retracement, but it could have probably been like a 61.8 from there, a 50% from there, I don't know. If we can calculate, let's say, I want to be accurate. So this overall move started at 1998 down to 1991. So it's 70 pips. This overall bearish move, it's 70 pips. A 50% will be 35 pips. 35 pips will be 94.5. Let me just remove the cat. Would be 94.5, and it didn't reach it. So as you can see, we almost went to 50%, and probably from here would be this is 40 pips, so it would be 20 pips. So it probably, yeah, it's probably a 50% from this of this overall move, and you can see it's a double top at a 50% and then continuation bearish. So let me just I don't like this, but yes, that's pretty much it. That's the overall bearish move. It's like 40 pips. We have a pullback of around 20 pips, I will say, and that's where the trend can resume with a double top and then a continuation. The best entry will absolutely be at the candle close at 50%, for the candle close at 50%, entry at this bullish candle close. Furthermore, I highlighted this one, but it's quite messy. I don't know. I don't like it. It's not a relevant PSA. End of pullback. End of pullback at during high time frame and lower time frame bearish trend. 50% of the last reasonable bearish impulse, double top, entry at opposite candle closure. We need a way, clear volume, but not clear direction yet. So that will be an anticipation, because if you didn't know about the future, that's quite a messy. To be a bearish trend, there's a lot of bullish candles that are often, as you can see, often engulfing the previous ones. Look at these bullish ones engulfing the previous ones. So it's quite a little bit also here. It's quite a little bit in anticipation. So I'm trusting the bearish move. I'm trusting that the 50%. So it's like placing a sell limit. I don't know what is happening. I don't know. I don't want to look at the price action. I'm just entering in anticipation of it. If you know what I mean. 97, 98. So I think that's afterwards. I don't know if it's the same day. Oh, this is early on. So that's early on, and I think I talk about this during the trade review. Break and retest of previous lows, but we are in a sort of a consolidation time, and we are now breaking below. This was the first entry that I would have taken. I should have taken, and that's like a 30 pips exactly on the dot. After USD positive data. So we also have the confirmation. Break and retest of previous lows. This would have been a loss or a break even, for example, but look at the entry. Entry would be exactly at this candle close. What I was looking at, of course, is that, okay, this is the last, from here, the last impulsive move. If we have a 50%, I will probably continue bearish. And also that's where I took the entry at the reaction in anticipation at these lows. So I'm not having more about it because I already talked about it. So now 75% again. So price is in a clear bearish trend. Yes, we might be taking and making a new higher high after breaking these previous lows. So we can clearly see that price at the time of the entry was making a double bottom at this level, 1990. Was breaking the last lower high. The price action is not really in a good direction. It's not very momentum. There's not a lot of momentum like it was doing over here, over here. Now we are quite in a messy period. So let me delete this and put it yellow because it's quite a messy period. So this is only entry in anticipation. What I really like though is that we have the 50%, the 75% confirmation, and then we have the retest of the 50%. So this entry, I would love it to enter over there. So for example, this will be the entry at the candle close and retesting the 50%. Because why? Because this entry, it's also matching this previous PSA. It's not a PPL, it's not something, but it's matching a PSA. So that could probably make more sense. So end of pullback at 75% retracement. High time frame in trend, but not really lower time frame. Price action is messy and directionless. Best entry would be at the break below 50% retracement and opposite candle closure. 2 candles confirmation. Moving either way. And that's pretty much it. And yes. Okay. So it's also very good to review the setups that I've been saving, because it also matters. They say, okay, no, you see, I was too biased and that didn't make sense at the time to take this entry, but also you can see, okay, if the 75% retracement was at this level, now it makes more sense. There's a pullback that is very slow, but we have an impulse right before New York Stock Exchange opening. Also, this one probably New York Stock Exchange opening, and is reacting at this relevant PSA. It's also matching now. If we see the overall trend, it's matching also the lower time frame. And the lower time frame, but coming from a clear downtrend. See next entry for better picture. See next setup. Okay, so now this is a much more clear setup, because of course we have a very strong bearish move. We are making a new lower low. We have a retest. There was a retest 50%. You probably take the entry. That would be a loss, or also matching the PSA, a loss or a small break even. Maybe you get out when you see this bounce and a closure above these previous lows. But 75%, you have nice 3 candles confirmation, where you have the first one slowing down with a big wick, another wick on the top of this bullish, and a very small bearish. The small bearish, you don't really like it, but it's still showing you that the price action is changing, that there are more sellers than buyers in the chart, and that's why you could have taken your entry. Much clearer. So end of pullback, clear momentum and trend and direction. In trend, lower time frame and high time frame, 75% retracement of the impulse that made a new lower low. 3 candles confirmation. Best entry would be at opposite. And doesn't really matter in terms of pips, I would say. But yeah, because this time the candle close is very close. But sometimes when there is volume time, the bearish candle is already like this, and you think, okay, it's too late to enter now. Okay, so this one was an actual trade. Okay, it's the one that I actually showed you. As you can see, that was the one with the trade. Missed setup. Again, multiple candle confirmation. Price action is bouncing from this level. And yeah, that's also when I think that's where I took the sell over here, I guess, if I remember. And then I missed the further re-entries. Again, now all the candles showing you, but the price action is not. This is more like, this is what I wanted to enter over there, mainly based on intuition, because is it 820 candle opening and rejecting it. So when I saw candle close bullish, then a retest of the same PSA, I would love to enter over there. really in anticipation. Then the price can just go up and I feel stupid. But that was in anticipation. Would it gap down? Would be to profit already. Then we have the candle closing and retesting these previous lows. Multiple candle because that's not a lot of volume that day. And you can see that the bearish trend is strong, but it's not really clear. There's a lot of candles. This is happening in over an hour, and it's not there's a lot of direction. But we have all these candles retesting, and the entry at the bullish candle in anticipation are so nice that it's that I wanted to highlight it. Key level, this is 2000, not really 2000, but yeah. That was I think a 4-hour PSA. Next one is the double bottom that I showed you before that. That's where I took a sell over there. And I got out with a small win, a small loss at like 10 pips. And I failed to identify that this was a double bottom, so I should have taken a buy. And yeah, another one is this one that I already showed you. Price will make a break and retest. That's what I talked about before that. Break and retest. Look at how nice it is. Just candle closing over there and then flipping bullish. That's why you have to enter in anticipation. And yeah, that was main intuition, but it's the same of the same trade that I lost actually. This let me show you. Which one was it? Okay. So it's the same as this one. So you see that the price action is showing some bullish momentum. Let me just reduce this so you can see it. So price action is showing some momentum. It's also coming from a strong bullish up. There's not, as you can see here, it's not coming from a stronger rejection at a key level, I would say. And there's still a lot of room. So I took this trade because I missed this one the other day. So that's why they are related. And of course, this is a bullish one. I took it. I didn't take this one. I took this one. This one was a loss. This one would have been a win. And that's the story of my life. And yeah, that's what I want to talk about. But still, you can see that there was a upcoming bullish pressure. Price is staying above. And we're coming towards the end of the hourly. Then further on, we see a breakout, a pullback. This is where I got my loss. And that's why I should have entered at a 50% retracement. If you can see here, this is the bullish move. This is the retracement bearish. That's like a 75% retracement. But if you don't want to enter in anticipation, you can see how the price is giving you this very nice confirmation because it's going bullish, breaking above, and is staying above for 1, 2, 3, 4, 5 minutes. Is staying above this level, and that's where I could have entered multiple times in anticipation. But it's just that at this time you think, okay, is the price going to, is this a retracement of a bearish and that we continue down, yada yada yada. But we are above a key level. I could have got an entry over there. As you can see, higher low and rejection. I didn't have enough balls to enter, but that's the same PSA that left before, and that's why I could have taken entry. And yes, that would have been good. You can see that would be here 30, even more, and that's another very clean retest of these previous highs, of this previous PSA. You can see here entry anywhere in these 3 candles will be absolutely gold. It's a lot of momentum. The price is clearly printing new higher highs, higher lows, and I don't know why. Okay, let's put like this. Okay, higher highs, higher low, higher high, and this is anticipation. Higher low, this one, higher low, this one, higher high, almost higher high, new one, and in anticipation of a new higher high over there. And you can see price is just skyrocketing, and it will skyrocket again. Double bottom at the PPL, and the previous PSA. That's exactly where it retested. So that's simple as that. In these days, these are the days that you should make more money. In that, for the month, it should be good to go. But in the future, I will be able to do so. Again, bullish upside, correction of like 50%, I would say. This level, this area, as you can see, we're talking about this. Now we have to zoom out because price is moving so fast, and that's just a continuation. This was to entry, but it was a 50 million PSA. Clearly, price is showing you weakness in the bears. You can clearly see the shift from this size of the candles. We're now, look at the size, how smaller they're getting. Tuck, tuck, tuck. Another attempt failed and then closing bullish. You don't want to take this one, but when you see this one and you see this retest of the same PSA, that's where you could have entered your second time, and that's why price is flipping bullish again. And multiple entries afterwards. You can see break and retest, break and retest. Okay, so yeah, that's pretty much it. Same setups, and yeah, I'm getting a little bit tired. Yeah, that's pretty much it. Very nice. This is from Friday. This was the trade that I took over here. The trade that I took, and we had later on a pullback to exactly the same PSA for a more 1987 for a 100 pip move in just a few minutes. Yeah, doing after 10 a.m. candle open. So guys, this was it. That's pretty much it for today, and I hope you guys enjoyed, and I will see you either tomorrow or Monday. Enjoy your weekend.